if you become a Portuguese tax resident under the NHR program, you will receive 0% interest taxation and 0% capital gains taxation for Portuguese tax law. Hello guys, welcome back to ESENtaxa. Andrea Papito here, and in this video I'm going to talk about how the investments are taxed in Belgium, Albania, Portugal and Italy. Basically the jurisdiction that we cover here in ESENtaxa. If you're new to this channel, ESENtaxa talks about how to optimize your taxation, how to squeeze your taxation and in a long term. So we try to find the best way to help you to find the minimal tax amount to pay on a yearly basis, especially if you want to move to Italy, which is we are the #1 channel that's in English language explains all the Italian tax law and system regulamentations, but we also are expert in Belgium, Portugal and Albania. In this specific video, I want to discuss about the investments, all those investments that basically allows you to receive as income either a capital gains or interests. Okay, so we're just going quickly through those jurisdictions and we check exactly where is the best place to be tax resident if you want to receive capital gains on interests, okay, because you have an investment either in this country or abroad, and comes with some double taxation avoidance that we have to discuss also in this video. So let's first divide these two kind of categories. First are the capital gains. For example, when I receive interests, when very easy, when I give this money to a certain bank, this bank gives me back interest. Simply, it's a basic investment, and this is returns in interests, and those interests are taxed in a different way compared to the capital gains, where it's a different kind of investment. It's where I behave like in a speculative way. I purchase something, I purchase an asset, and I weigh that the value grows in the years, through the years, okay, and then I will want to resell it with the capital gains. Now, let's start, for example, with Portugal. Portugal has the famous NHR program. Thanks to this NHR program, if you qualify for this program, all these elements, all these type of incomes are basically tax-free, exempt from taxation. So you don't pay anything in Portugal for capital gains and interest. So if you become a Portuguese tax resident under the NHR program, you will receive 0% interest taxation and 0% capital gains taxation for Portuguese tax law. Of course, what you have to check, if you, since the NHR works with your foreign income, the first thing is that Portugal has to check if you receive this kind of capital gains or interest from a country that has with Portugal an agreement to avoid double taxation, first element. And second, you have to see how much is the withholding tax for capital gains and interest from the country you are receiving this income. This is valid for anywhere in the world. Wherever, if you're receiving income from abroad, if you're receiving interests or capital gains from abroad, you might have some withholding tax for not resident in that country from which you have originated the capital gains and the interests, okay? So even though Portugal doesn't tax you, you have to make sure to deal with the local withholding tax from which you receive interest and capital gains. Some countries, they don't give you any withholding tax for non-resident. Other countries, they apply withholding tax, but reduced based on what is written in the convention to avoid a double taxation between the country you're residing and the country from which you're receiving this income, okay? But when you receive this income from Portugal, when you receive this income when you are a Portuguese tax resident, Portugal doesn't tax you, okay? The exception, it's just against the tax haven countries in which the NHR doesn't work. Now, what is the other jurisdiction that we cover here in ESENtaxa? It's Albania. So Albania has a 15% tax on capital gains and 15% tax on interests. Now, if you are investing in Albania and you are receiving capital gains in Albania or interests in Albania, you pay only 15%. But if you're receiving income from abroad, capital gains or interests from abroad, so the investment that you have done is in another country, you might be subject, as I said before for Portugal, to some withholding tax locally. Now, based on the Albania and this country from which you're receiving interest on capital gains, you have to check how much is this withholding tax and check if the convention to avoid a double taxation between Albania and this country tax credit this amount of money. What does it mean? It means that, for example, I'm receiving interest from a bank account in Germany. I'll just give you a random example. Germany also apply our 15% withholding tax for non-tax resident, okay? While for resident it applies 26%. But since I'm an Albanian tax resident, I pay 15%. But then I have to pay also 15% in Albania. You see, so both countries want their slice. But because of the convention to avoid the double taxation signed between Albania and Germany, most likely this is a tax credit. So actually, if you have already paid 15% here in Germany, you don't have to pay other 50% in Albania. So, and this is something that has to be checked case by case, convention by convention. Each convention has a different description, different way to avoid the double taxation. So to be taxed twice in the country from which you are receiving interest and capital gains, and in the country where you are residing. So for Albania, we have, if you are tax resident in Albania and investments are in Albania, you only be subject to 15%. There is no need to go around the double taxation convention. So these are the first two jurisdictions. The other jurisdiction, quite interesting, is Belgium. Belgium is quite particular for capital gains, especially for capital gains. For interest, we have double percentage, either 30%, which is quite high for general interests, and 15% only for bond of the state or some savings, bank account savings. The interests, investment through interests, is not so much convenient in Belgium, but what is quite nice is the capital gain, because the capital gains under certain conditions is not taxed. If you have invested, of course, in Belgium. Why? Because Belgium works in this way. If you have assets and that you own for a long time, like for at least 6 months, this is the guideline, you're not supposed to be a speculative subject. You're not a speculative person. So you're not subject to the speculative taxation, which is the big 33% in Belgium. So you're not subject to this. You're not subject to the 33% tax, but you're not even possible. So this income, this capital gains that you receive, this gain realized is completely tax-free, is not even declarable in your Belgium tax file return. Finally, which is the other jurisdiction that we cover here in ESENtaxa, is Italy. So unfortunately, is the worst country to have an investment as Italian tax resident, unless you have it in Italy. Because if you have an income coming from abroad as a capital gains or as an interest, Italy doesn't tax credit anything. I will explain you what's going on here. So in Italy you have for the capital gains and interests the same flat tax of 26%, which is quite high compared to the rest of the countries. Now, as long as you have investment and capital gains and interest coming from Italian territory, you pay 26% and that's it. But if you're receiving interests or you have invested in stocks abroad, for example, in the United States, apply a withholding tax for the Italian tax resident of 15%. And despite the fact that we also have seen this kind of situation here with Albania, we have seen that Germany withheld like 15% and then you can tax credit again the 50% of Albania. But for Italy, this doesn't work in the same way, because the convention to avoid the double taxation between Italy and USA, but also with Germany, so Italy has this rule for all countries in the world, you cannot tax credit this against the 26%. So it means that you pay 15% in US, and what remains, the net, will be taxed also 26%. So actually you're not going to pay 41%, actually. It's a little bit less, because you pay the 26% of what remains of your 15%. But it's a huge amount of taxes that you have to split between Italy and US for this specific example. So here in ESENtaxa, we also analyze these kind of things when you want to move to a certain country. For example, Italy is very important because we have the impatriate regime. So as long as you are a professional, as long as the main income is coming from your work, of course Italy is the best place to be, is the best jurisdiction to squeeze your taxes down. But then you have to also consider, what about your investments? What about your interest, your capital gains, and everything, any other type of incomes that are coming from abroad? And we have to also analyze this element, otherwise it's true that you save taxes on your professional income, but you're going to waste a lot of taxes on the other income. So it's always a matter of finding a balance, and through a tax simulation, analyze your worldwide income type by type. I hope just here I gave you a glimpse of what we do here in ESENtaxa. This is just very, very general overview. if we want to deep dive on this kind of discussions, analyze the convention to avoid the double taxation with your country where you're residing right now, and Albania, Belgium, Italy, and Portugal, just let us know. In the description below the video, you will have our email contact, info@ESENtaxa.com, or you can book a call with us in which we can you can ask us whatever question you want, so we can also arrange a longer call, and we also can arrange a tax simulation in which we can guide you through our analysis and allow you to have the best choice in order to save as much as tax possible. Thank you for watching this video, and like button, notification bell, please don't forget, and see you to the next content.